Good afternoon. We'll call the hearing to order. And today we welcome back to the committee SBA Administrator Karen Mills. Thanks for being here. Administrator Mills is well aware of the committee's interest and role in making sure the SBA's financing programs are not only serving the needs of small businesses, but they are also being managed in a way that safeguards taxpayer dollars. The committee has held a variety of hearings that have highlighted both the needs of small businesses in accessing capital and the needs of lenders for clear and consistent regulatory guidance. During a time of fragile economic recovery, when we're looking to our small businesses to help create growth and jobs, how to meet the financial needs of these firms is of great importance. In fiscal year 2013, the SBA requested a 67% increase in subsidy to cover the cost of its financing programs while lowering the authorization level in the 7A and 504 programs. As the SBA financing programs become more expensive to operate, it is vital that we look for ways to reduce costs to the taxpayers. This means making sure the SBA is effectively managing its programs in a transparent manner, reducing paperwork burdens, and conducting effective oversight of lenders. Today we're here to examine the procedures that SBA uses to manage its financial assistance programs, and we'll also look at how SBA undertakes its mission of overseeing its $90 billion loan portfolio and controlling costs. For the SBA lending programs to be effective, they must control not only costs but also control risk. And we look forward to learning more about how the SBA sets policies for its financial assistance programs. To find out how SBA is doing to be more transparent to its lending partners and to the public, and how SBA is managing risk to the taxpayers. SBA must foster the partnership between agency and its private sector lending partners so that the SBA lending programs can achieve their statutory mission of serving the needs of small businesses. At the same time, we understand that the SBA needs to exercise robust and effective oversight of its lending partners, who are often given a great deal of discretion to obligate taxpayers on behalf of the SBA. And with that, I'll yield to Ranking Member Velasquez for her opening statement.
Thank you, Mr. Chairman. For the past 2 years, our nation's economy has experienced steady private sector job growth. The unemployment rate, which peaked in October 2010 at 10%, has fallen by almost 2 percentage points. But these gains have not been enough to overcome the high hurdle in unemployment. If there is any takeaway from last week's disappointing job numbers, it is that we still have a long road ahead of us, with millions of Americans who are seeking work that cannot find it. This is why small businesses must remain front and center to our recovery. They remain our single greatest source of new jobs, but in order for entrepreneurs to play their traditional job-creating role, it is essential that they have access to capital. It is the fuel for innovation and economic expansion across the spectrum of entrepreneurship. However, small businesses face real challenges in the capital markets. While lending conditions and credit standards have improved significantly over the past year, companies' balance sheets have not yet fully recovered. Recent economic indicators also raise doubts as to whether the flow of affordable credit will be sustained. In past recoveries, the Small Business Administration's access to capital programs have been critical to providing small firms with a stable source of credit. While the SBA has some success in leveraging these programs during the worst of the downturn, recent policies have steered some less than favorable changes. Costs in the 7A and 504 loan programs are escalating rapidly. Lending is stagnant, and small dollar loans to startups are on the decline. During today's hearing, I am hopeful that we will not just tout past successes, but instead focus on what the agency is doing to reverse these negative trends. These are real problems, and no amount of window dressing or clever marketing can make up for the growing gap in small business credit. Getting loans in the hands of would-be entrepreneurs has never been more important. Doing so is not just critical to reducing unemployment, but growing our economy for the long term. On that note, I would like to thank Administrator Mills for appearing before the committee today. I am interested in hearing your thoughts on how best to meet entrepreneurs' capital needs so that they can continue to create new jobs. With that, I yield back. Thank you, Mr. Chairman.
Thank you. As I mentioned in my opening statement, our witness today is the Honorable Karen Mills, Administrator of the SBA. Ms. Mills has been in the administration since 2009. And welcome back to the committee, and we appreciate you coming in.
Well, thank you very much, Mr. Chairman. Chairman Graves, Ranking Member Velasquez, members of the committee, thank you for inviting me to testify on SBA's Lender Oversight Program. I've submitted my full written testimony to the committee, which I asked to be made part of the hearing record. Our goal at the SBA is to ensure that small business owners and entrepreneurs across the country have access to the capital and help they need to grow their businesses and create jobs. Today, our lending is running at above 2008 levels, following a record year in 2011 in which we supported more than $30 billion in lending to over 60,000 small businesses. In addition, our small business investment companies also had a record year, putting $2.6 billion directly into the hands of more than 1,300 high-growth businesses. While commercial lending has improved, we know that gaps remain. Small dollar loans and loans in underserved communities are still not back at the levels that we need them. To solve this challenge, we are focused on what we call a more doors, more dollars approach. This has allowed us to open up product lines to qualified community development financial institutions, and we have streamlined and simplified loan processes to increase small loan volumes. At the same time, we are committed to aggressively protecting taxpayer dollars and ensuring that our programs are cost-effective. As I've testified before, we take a zero-tolerance stance to fraud, waste, and abuse in all of our programs. Over the past 3 years, we've engaged in extensive review and redesign of SBA's lender oversight activities. At the core of this effort has been increased collaboration with our Office of Inspector General. One of the areas we identify early on is the importance of a strong oversight culture that is made possible through close coordination between the Office of Inspector General, our Office of General Counsel, and key players across our loan programs. The results have been tangible. For example, we've worked together to close more than 80 Inspector General recommendations in the last year alone. To further increase the intensity of our oversight activities, we are incorporating best practices from our sister agencies, including FDIC, the Fed, and the OCC, as well as private sector financial institutions. We also sought out and incorporated feedback from SBA stakeholders, internal analysis, GAO reports, and advice and recommendations from members of this committee. Today, we are seeing the results of these efforts, including more robust agency enforcement. Over the past 3 years, we've declined to renew delegated lending authority over 300 times for SBA lenders, where these entities did not meet SBA's loan standards. And we've suspended or debarred over 50 loan officers, loan brokers, packagers, and applicants in the 7A program. We've also increased the activity of our Lender Oversight Committee, and we initiated a new Lender Supervision and Enforcement Task Force with the aim of originating enhanced supervision and enforcement actions. In addition, we're making significant organizational changes within our Office of Credit Risk Management, including the hiring of a new director who brings a wealth of experience monitoring lenders, large and small. We're making these enhancements. We've worked closely with our lenders and our stakeholders to address their concerns. In response to their input, we have simplified and updated our rules for lenders and borrowers, streamlined provisions of our loan programs, and are providing increased transparency in our lender communications and requirements. We believe that these ongoing efforts to ensure consistency and clarity will further strengthen our ability to manage agency risk. All of these changes and enhancement flow from our three-pronged approach to manage risk, and I've mentioned this before, providing greater focus on preventing fraud or abuse before it happens, continual monitoring of loans in the SBA portfolio, and strengthening our enforcement function by punishing bad actors. This approach has been extremely successful in our efforts to root out fraud, waste, and abuse in government contracting, and we are seeing similar results in lender oversight. Thank you again for the opportunity to testify before you today. I look forward to working closely with this committee to build on the significant progress we've made, and I am happy to take your questions.
Thank you, Administrator Mills. We're going to start out with Mr. West.
Thank you, Mr. Chairman and Ranking Member, and Administrator Mills. It's great to see you again. And that's one of the big things that I'd like to focus on is this idea of accountability and the transparency and refining and streamlining the processes, but also the consequences thereof. You mentioned the 50 loan officers, brokers, and packagers that suspended or debarred fiscal year 2009. Has that increased or decreased as we look in the last fiscal year or so?
It has increased significantly.
Okay. And then the 347 lenders, when you look at this preferred lending program, do we need to get tighter as far as the criteria by which we are allowing people to be preferred lenders? Is this a program that we want to continue on? If you have 347 that you had to, did not renew their preferred lending status?
We have, as I mentioned in the written remarks, done an extensive overhaul on how we assess our lenders, including looking at the criteria for their risk ratings. And we are using different criteria, more expanded criteria, including activity level, size of loan, actual changes in lender behavior, which turned out to be very important indicators. And on average, we audit about 180 lenders per year. So we are really revising our entire risk-based reviews.
And I guess the so what to it all is you talked about punishment, consequences. Can you give us an idea of the specific things that the ramifications of not being renewed or being debarred by the SBA? I mean, what really is going to hold people's feet to the fire so that we do have the access to capital that is necessary for our small businesses and we don't have bad actors, as you just talked about?
We have put together a real intensive focus on both supervisory and enforcement actions. And we have a new lender oversight committee and what we call our lending supervision and enforcement task force. And they assess each of the circumstances and go through the proper procedures and figure out whether what the consequences are. But I think the message is clear. We have a zero-tolerance policy for bad actors, and we are going to make sure there are consequences.
Can we make sure that we can get that into the Code of Federal Regulations if those standards, criteria, whatever, are not there currently?
We work with those that are there currently, and we now have great cooperation with our Inspector General and the Department of Justice as well.
And, I have to be fair in asking this. We didn't grow the administration to have this new agency that you're talking about. I mean, this was in-house or what?
We have reorganized in-house.
Then I'm happy. Thank you, Mr. Chairman. I yield back.
Ms. Velasquez.
Thank you, Administrator Mills. In an interview you gave to the New York Times in March, you stated that the gap in credit for small dollar loans and loans to underserved communities was caused by the withdrawal of the big banks from the 7A program. You also stated that major effort is now underway to bring them back into the fold. Do you think this is a sound strategy, given that these negative trends were caused in large part by an over-reliance on a handful of large lenders to drive lending?
Well, Ranking Member Velasquez, you're exactly right that this issue was caused by the fact that we had only a few large lenders making loans of the small dollar variety. And in the credit crunch, they went away from the market, and they had been using consumer credit scores, and as a result, they had made a lot of loans that turned out not to be very good.
Do you recall in previous hearings where you attend and you participated in that I raised the same issue?
Yes, and you have been very, very helpful and consistent on this, and as a result, we have been focused on a number of solutions. As you mentioned,
what is the strategy?
There are three pieces to the strategy. We call it, as I said, more doors, more dollars. So the first strategy was in the community, whether you walk through the door of the local community bank or the CDFI, we wanted to make sure you had access to an SBA guarantee. We brought 1,000 banks from the community bank sector back to SBA lending, and then we opened the doors to selected community development financial institutions that had good lending records to be able to make 7A loan guarantees.
Isn't it
but
true
it's
that,
not enough.
yeah, isn't it true that most of those banks basically made one loan or were attracted by increased guarantee from the Recovery Act? Once that expires, they're gone. So what is your agency doing to recruit new lenders and support their lending efforts, particularly if they only make 1 or 2 loans a year?
Well, once again, you're exactly right. The real bulk of these loans come from the large lenders, but we could not open up to the same procedure as we had before. So we have changed our process to use a different methodology called the Small Business Predictive Score, SBPS. It is a score used in lieu of the consumer credit score. We have incorporated this into our new processing of our small loan advantage loans, because large lenders and regional lenders were not making small loans because it was too expensive for them. So we understood their processing issues, reduced their cost, and then instituted a more predictive score in order to make sure that the loss rates would not skyrocket.
You know, in my opening statement, I raised the issue that this economy is still fragile and that the last report shows that the unemployment rate went up. And basically, the companies that will be creating those jobs are new startups. And it's just like for 2-3 years now, since 2008, I've been raising the same issue. And since the Jobs Act increased the maximum SBA loan to $5 million, the percentage of smaller loans defined as those of $150,000 or less declined from 17% of total lending dollars in 2009 to just 8%. So the jobs that we need to create, those companies and those startups are not getting the credit that they need. And I don't see that just by creating a new pilot program or a new program, lending program, that is going to reduce paperwork. SBA Express Preferred Lending Program, all of them reduce paperwork.
We have launched a small loan advantage program June 1 with new procedures. And on day 1, we had 45 loans in the queue. This is a highly exciting product process improvement for our lending community. So we believe that this will be a very important augmentation for the problem that you just described. And we are going to continue to work on the startup problem, which you mentioned, which is also very, very important.
Last year, the Women's Procurement Program was finally put into place, and agencies began awarding contracts under this program in the second half of FY 2011. However, contracting officers have not been really using this program. In the current fiscal year, there have been 143 actions worth $3.6 million. So I just would like to ask you, since we passed this legislation, we went to court, U.S. Women Chamber of Commerce went to court, the new administration promised that it will have it up and running, and it has taken this long. My question to you is, can you outline the steps that SBA and you specifically are going to take to educate contracting officials of their ability to set aside to women-owned small businesses?
Well, I'm happy to get back to you with a list of specific events and activities. We have a continuous program, and I personally am very committed to our women's contracting rule. As you know, this was passed by Congress in the year 2000, and we took it up and went through the entire process of getting it up and running, and we have, I believe it's close, I'm going to get you the exact number, but I think it's 8,000 women who have self-registered in our contracting registry. And we now are active every day with every agency because we have goals, and we are holding our agencies accountable for meeting those goals.
Well, numbers speak volumes. $3.6 million have gone to women contracting awards. So all I can say is that women-owned businesses have been waiting for 10 long years, and they deserve better. Thank you.
Mr. Mulvaney.
Thank you, Mr. Chairman. And Mr. Mills, thank you for coming today. I applaud your efforts regarding the smaller loans. It's something that we've seen both in this hearing room, but also as we've traveled the country. I know that Ms. Chu and I went out to her district and heard exactly this, that the small businesses were having difficulty getting access to the smaller loans. And the numbers that you heard the ranking member mention about the size of those $150,000 or less loans dropping from, I think, 17% to 8% is exactly what we're seeing in the real world. So, again, on that front, I applaud you. I guess my question is this. Other than you talked about bringing in some more community banks, which I think is a tremendous idea, because, again, we saw the same thing you've just described, which is that fewer banks are actually doing this. You get to a bigger bank, the small loans don't make any money for them, so we have to figure out a way to fix this. How, beyond reaching out on this More Doors, More Dollars program, how are you actually physically changing the process? Specific examples of how you're making it easier for my local Camden Community Bank to make a $50,000 SBA loan?
Well, we would be very happy to sort of walk you through the actual changes. We have re-engineered our entire Small Loan Advantage, and this is what launched. Small Loan Advantage is actually a processing option for lenders, and it is under our 7A program, but it is designed to solve the problem that lenders have, which is making small loans wasn't affordable. They weren't making any loans because they weren't making any money making those loans. So we have recently implemented further streamlining, and the use of these small business predictive scores is a very important component of that because it reduces the time to make the loan, and it has been proven much more predictive of success than consumer credit scores. So that's one of the key
I understand
components.
the change on that, but if I'm a banker, and I used to do loan closings, and I dealt with bankers all the time,
Yes.
and if I'm a banker, one of the things I'm interested in is the number of forms I have to fill out and the number of documents that I have to process.
Well, we are happy to take you through them. They are much reduced. They are much more automated.
And you think it's more accessible now to community banks than it was a year ago?
Absolutely. We have changed this format so that it is open to all lenders, not just our preferred lenders. And we have a streamlined option. Lenders have the option of using their own notes, for instance, instead of using SBA notes, so that reduces the amount of paperwork. That's a tangible
Is what you just
example.
described part and parcel of that program that went in on June 1st, or was that a different program?
No, this is part of the June
Part and
1st
parcel of this.
revision.
Okay. Well, good. I encourage you to continue to do that because, like I said, what we've seen in the real world is that for small businesses, these things have dried up. I've got a couple very quick questions to follow up on what Colonel West had asked about, which was the 50 loan officers or brokers, packagers that were suspended or disbarred, the 347 lenders that you took off of the, you did not renew their preferred status. I recognize that's those 400 different circumstances, but do you see any general trends in the reasons why you are taking those actions? What are you seeing out in the field amongst the loan officers, for example? Are there general things that are happening that says, wait a second, this is one of the things we need to, reasons we get rid of these folks?
Well, that's a very good question, and I think once again I'd like to get back with you on the details. But we know now that we have a whole series of indicators, and we are incorporating those learnings when we know, for instance, lender behavior is a very important indicator. When loans start to go up very, very fast, it's an important time to look at a lender and dig deeper and perhaps do a more risk-based audit. So we are using those criteria, and we can show you what they are.
Great. Thank you. And then finally, last question on a budget, and I apologize for being the budget person. The budget this year did not request an extension of the commercial refinancing program in 504. Why was that?
Well, the commercial refinancing program in 504 has, in fact, been quite a successful program in the last year, and it has allowed small businesses to refinance mortgages and use some of that capital as working capital, which has allowed them to grow and create some jobs. It does expire at the end. It is not authorized to go forward, but I will point out that it has picked up steam, and there's a lot of people out there who like it.
Okay, great. I yield back the balance. Thank you, Mr. Chairman.
Thank you, Mr. Chairman. Well, it was a popular program. Why is it not being requested to be reauthorized, though? I guess that's the question following up on Representative's point, because it's tough for small businesses to get access except through that creative program you developed.
Right. And, well, this is a very good question, and it's something that has come up before Congress in a number of ways and a number of times, has not yet been reauthorized.
So you wouldn't be adverse to us suggesting it be reauthorized, I guess, is where we're going with that.
It certainly has a lot of success right now in the marketplace.
I want to congratulate you on some of the great work on the delinquency stuff since the new sheriff, if I may refer to you that way, is in town. The delinquency rates for 504 and 7A have gone down very dramatically, and it looks like the attention on getting good quality loans out there is being met. So I want to appreciate that access. How about what's the situation for capital? At the end of each cycle, it seems like SBA, even rural development for that matter, the capital gets drawn up quickly, and inability to make loans because of insufficient capital. Where are we right now with the SBA in terms of capital so that you can make the loans you want to make?
We have room in our authorization to make all the loans, large, small, medium size, that we need to make.
Good, good, good. And then historically, we've had problems with our HUB zone programs and some of our veterans programs where certain unscrupulous people take advantage of them, and you've, I know, had your attention on them. Can you comment a little bit as of, recently here this month, how we're doing in terms of curbing some of the ne'er-do-wells and their taking advantage of programs they shouldn't have access to?
Well, as I said, we have a zero-tolerance policy for fraud, waste, and abuse, and we began our effort with our government contracting programs and with particular regard to HUB zone. We have three pieces of that, which is upfront certification, ongoing monitoring, and going after bad actors. In HUB zone in particular, we completely redid the upfront certification and now have a streamlined, effective process for HUB zone certification. So we are working very hard. We are always improving processes, but that major hurdle that we had has been successfully moved forward.
And we haven't had a GAO report since then, I guess, to establish how well it's doing, I guess, at this point in time, but you feel confident you'd survive much better than we have in the past as a result of the changes you've made?
Yeah, we take an ongoing look, and we do not take our eye off the ball on those government contracting programs.
One of the other issues that comes up a lot, and I don't know how much control you have over it, is that with some of the minority women contracting issues, some of these firms develop to become firms to take advantage of that program, and the real small business men and women don't actually get these contracts at the end of the day. They go out to larger firms that purport to subcontract this out. A lot of times it's out of state, small businesses. Is that something agencies focused on at all?
We're absolutely focused on making sure that the program benefits go to those who are qualified to receive it and for whom it's intended.
Excellent, excellent. Good, good. And then again, following up on some of the questions that have been asked, does SBA have particular improvements in some of the timelines? You alluded to timelines as far as getting a loan application to resolution. The difficulty sometimes of getting these loans, the paperwork notices we heard over the last 2 or 3 years. Are you tracking that sort of data? Getting it done quicker, better?
Yes, we absolutely track our turnaround times, and they range in the 10 to 20-day turnarounds. And we have made significant improvements over time, and we have a dashboard where we know where it is weekly.
And that's an improvement. What was it when you came in, if I may ask?
Oh, it was significantly longer.
Okay. That data would be good. I think you should use that data to talk about some of the turnarounds that have occurred, since you've taken office. I appreciate your attention on all the quite frankly, the agency had been, in my opinion, some disarray and not well funded, not well appreciated, and as has been pointed out, there's still a big lack of capital for really smaller businesses. So, hope one question on that, I guess. I've got time. You're doing well. I'm doing well. What about rural lending? That's another issue that we're concerned about. It seems to have fallen off a tad, and obviously want to make sure that rural America responds to.
I was just in West Virginia. Next week is our first anniversary of some of the things we announced for rural America. We are very focused on making sure that we have an inclusive strategy for entrepreneurs all across the country, that it's not just on two coasts, even though we like the coasts.
That's fine.
And because
Good
we
answer.
see there's tremendous innovative entrepreneurs, even very technical entrepreneurs in all kinds of rural areas, and they don't have as much access and opportunity. So we have cultivated regional banks, community banks, credit unions, and other lenders to make sure that they are using these new products, and we are also focused on it in our SBIC, where we did special focus on rural small business investment companies.
Thank you very much. I yield back. Thank you.
Ms. Herrera-Beller.
Thank you, Mr. Chairman. I actually only have, I'm taking in everything that's being talked about, and I have a couple questions that are a little bit more specific, and I was hoping to get your comments on them. And obviously, you can't speak to a specific case, but I wanted to share some feedback with you. I had a printer in largest county in my district, was working with a lender to apply for an SBA loan, and he said this was at a town meeting. He raised his hand and said, it's very frustrating and time-consuming, so obviously we wanted to know a little bit more about it. So this is what happened. The local bank took the application and then came back to him and said that the SBA asked for more documentation, which he provided. He jumped through those hoops. In the meantime, the bank gave him a line of credit while they were kind of going through this process, and which obviously later termed out at a very high interest rate. He later found out that the bank never presented his application to the SBA. And I was very, very curious about how much leeway these banks get in picking and choosing what loan applications they pass on to the SBA, and what you're doing to improve oversight in instances like this, where someone thinks they're in good faith doing, and the printer's still operating today. It's not like it was some fly-by-night operation, right? It was a good standing business in the community, still is. Is this common to hear something like this?
Well, first of all, I appreciate your having brought this to our attention, and it is what we do every day to follow up on small businesses that need access and opportunity, whether it's to loans or contract or counseling or other help. So we are always happy to have our people go see what we can do to help them. In this particular case, and to answer your general question, we have a public-private partnership between the federal government and banks, and that makes for a very cost-effective program. So banks are supposed to make all the loans that they can without the SBA's help, because if the market will provide credit, then why should the taxpayers subsidize that? But there are lots of instances, as we know, that small businesses don't meet the credit standard, but they're still good, and the bank would like to make the loan, they just need a little help. That's where they come to the SBA for an SBA guarantee. So it would need to meet the criteria that the bank could not make this without the SBA help. If the bank, the other thing I would say to your small business is, when you are preparing for a loan, you should come to one of our SBA Small Business Development Centers and get a mentor and a counselor to help you work through your business plan and your bank package. It tends to make for a more credit-worthy conversation when you get to the bank, and they can help direct you to a bank that is interested in that particular industry.
Well, and that makes sense. However, if you're using the bank or banks as your partners, and they're kind of an entry point, so to speak, and I get it. If you can make a loan in the private sector, go for it, right? That's mostly what we want. But this is during the credit crunch, when small business lending, SBA was really the only game in town. And so here, this borrower thought he was dealing with the SBA and jumped through the hoops to comply with what he thought was SBA paperwork, it seems somewhat disingenuous for a lender then to say, yeah, we're helping you get there, and then, oh, well, you'll just do the loan through us, and it's a high interest rate, and SBA isn't involved. I mean, is there some sort of regulatory guidance? I mean, I understand that you guys are overseeing the loans that you've made, but at one point, is someone paying attention to the partners and making sure the partners are following SBA policy? Does that make sense?
Well, we pay tremendous attention to the partners and make sure they follow SBA policy. And the banks, in this situation, we'd be happy to follow up with you further. But I want to assure you that there are strict SBA policies, and one of which is that they need to make a determination that it is it's an SBA situation.
And so do they let the borrower, potential prospective borrower, know at some point, yeah, you came here for an SBA loan, you're filling out the SBA paperwork, but this is just going to be a conventional loan through a bank? I mean, is there any kind of requirement that they up front say, okay, it's not going to be SBA credit, we're going to kind of walk you through this process?
I would be happy to get back to you with the specifics on the guidelines on that, specific communication. We can get back to
Well, not even just this case, though. I mean, in general, do they have to at some point say, hey, you're dealing with us, the bank, not us, the SBA partner? Do you require that?
I'm happy to go through the specific guidelines to answer that question. But in general, yes, the bank does say, this is a loan from us, or the bank says this is a loan from SBA, and the paperwork would reflect it's a loan from the bank or a loan from the SBA.
Thank you, Mr. Chairman.
Mr. Owens?
Thank you, Mr. Chairman. Thank you for coming to testify today, Administrator Mills. We've had a lot of conversation and questions about credit availability. And you just described in response to a question the fact that primarily you want the banks to do the lending. Secondarily, you want a form of guarantee program. Thirdly, you'd have a direct loan from the SBA. Would that be a fair ranking of those?
No, sir. Let me clarify. First, the marketplace provides 90% of the lending to small business. The role of the government guarantee is to provide additional access and opportunity when the bank won't make that loan. We do not have a direct lending program except in our disaster loan operations.
Okay. Now, there does come a point, and we did hit that in 2008 through 2010, where the SBA has to make a decision about a guarantee as to the creditworthiness of the borrower. And in many instances, what occurred during that period was that creditworthiness would not meet your standards, and therefore the guarantee was not issued. Would that be a fair statement?
Well, we have a process where a bank will make a decision about whether they want to make a loan or whether they want to make a loan with an SBA guarantee. In certain cases, that authority is delegated to lenders to make that decision. And in other cases where we have not granted delegated authority, it comes to our processing centers for credit review.
And there are times, obviously, when you make a determination that the borrower is not creditworthy.
That would be correct.
And that accounts for some of the declinations in the loan process. In other words, they were declined a loan because they were not creditworthy.
Correct.
You also talked a little bit about this predictive score, and I'd like to hear a little bit more about that. Exactly how you operated and what the source of that analytic is.
So the Small Business Predictive Score has been around a long time. It's used throughout industry, and in fact, we have had it for quite a bit of time analyzing our portfolio. And but on the front end of the portfolio, the standard had been for many banks in 2005, 2006, 2007 to use consumer credit scores as a cutoff. We have a lot of legacy defaults from our 2005, 2006, 2007 portfolio. In fact, that is a substantial part of our subsidy cost. When we look going forward, we have begun to make a new analysis of our credit thresholds as part of this entire look at credit risk management. And what we have found through extensive analysis is that this commercially available, widely used industry standard product, the Small Business Predictive Score, is a much better predictor than the consumer credit score. So we have now begun to incorporate it even more significantly in the front end of the credit process.
And that analytic you indicated is an industry standard. I'm assuming you mean the commercial lending industry?
Correct.
So you're taking something from the private sector and incorporating it into your analytics and making your decisions.
Right. But this is something that we have had access to and is part of our system, and we've been using it more on the back end than on the front end.
Thank you. I have no further questions.
Mr. Landry.
Thank you, Mr. Chairman. Administrator Mills, I wanted to ask you a question about a correspondence that I sent to you back in October of last year concerning hub zones. And it's just a kind of basic question, because I sent the letter to y'all, and the response I got was really not suffice if it didn't answer the question. Could you tell me what the current status of the hub zone program following that recalibration is? I mean, I had 3 parishes or counties in the district that were removed from the hub zone, but the calibration was being done at a time when the Deepwater Horizon incident was affecting our economy. And my question to y'all, which has not been answered, as to whether or not the economic, if y'all use the economic data or look towards the effects of the government-imposed moratorium on my district, and specifically those counties because they're on the Gulf, if that impact was used when recalibrating their position.
Well, number one, I want to tell you straight out that we will go back and take your original letter and any additional thoughts or questions or clarifications that you would like and spend the time to make sure that you have a full answer.
Thank you.
We want to make sure that we spend that time and have you be satisfied with the response. The Hub Zone program is right now designated by census data as to what is a hub zone. And we had some new data, so we have new hub zones and new maps, and we want to make sure, we will follow up with you after this meeting to make sure that we understand specifically how that affected your counties that you mentioned.
Right, and that's the only question that was left unanswered, was just the fact that when you took the census data, prior to the Deepwater Horizon incident, we were experiencing an economic upturn. However, the administration created an economic downturn due to the moratorium. And so I just thought that it would be fair to calculate that amount in there. And I just would ask that y'all take a look at that and to see if there's anything we could do to determine whether or not that data would put them back into the hub zone status.
Yes, we would be happy to. Look.
Thank you, Mr. Chairman. I yield back.
Mr. Kritz.
Thank you, Mr. Chairman. Thanks, Administrator Mills, for being here. It's good to see you again. And our walk through Vandergrift was very nice. We got a lot of good feedback from that. My first question is, I had a field hearing in Pittsburgh earlier in the year in April, and it was about small businesses engaging in international trade. And many of them discussed the critical role that credit and capital play for companies operating in foreign markets. But they don't know that the SBA is a viable option. My concern is that district offices are cut to the bone, and I'm wondering how the agency can better market itself so that exporters are made aware of SBA's trade financing programs. And what brought this to light is that I guess in The past year, nearly 3 times as many export loans have been made by the Ex-Im Bank than through SBA to small businesses. So I'm curious why the SBA is lagging behind, and what do we need to do to market it?
Well, first of all, you're exactly right that there's tremendous opportunity in export, and I'm happy to get you the exact statistics on, but I assure you there's been tremendous growth in the SBA export loan program this year, actually record growth, and also in our export counseling. But I want to point you to our STEP grants, which are the vehicle that we have been given by Congress to get even more impact in a state-by-state basis. This is $30 million a year funded for 2 years to give in competitive grants to state export offices to work explicitly on small business exporting. And this ensures that our district offices, the state offices, and any other players are acting in a coordinated fashion on the ground so that we make the best use of the buck.
Oh, good. Good. Thank you. The second question is, just over a year ago, SBA implemented a small loan advantage pilot program, which delegated authority to current SBA lenders to make loans based on basically the 2-page application. In the past, efforts to reduce paperwork and delegate authority have led to dramatic increases in default rates. What safeguards are in place to ensure that this new effort does not facilitate poor underwriting decisions or ultimately increase the cost of the 7A program?
As I was mentioning earlier, the Small Loan Advantage 2.0
Right.
is a processing option for lenders under our 7A program, and it has been recently improved and streamlined further and opened to non-delegated lenders. And that went into effect June 1 with very strong response from the lenders. The safeguard that you described is the use of the Small Business Predictive Index at the front end of that new processing.
Okay. Thank you. Well, the committee is well aware of the economic slowdown, or what the impact of the economic slowdown had on SBA's lending portfolio. And we worked hard to provide SBA tools to bring lending volume back to pre-slowdown levels. I also believe that it's important you have to walk that line between providing small businesses the capital while protecting the taxpayers' money. Can you tell us the current state of that portfolio, and can you describe also the creditworthiness of SBA's lending portfolio?
Yes, if you look at my written testimony, on page 5 there are 2 graphs that describe the state of the current portfolio. In terms of delinquencies and purchase rates, they peaked in the final quarter of fiscal year 2010, and they have been steadily declining since, and they are at about the pre-recession levels at the moment. And the second graph is the small business predictive scores over time, which is a indicator of the creditworthiness of the portfolio, which, as you can see, is improving.
Well, very good. Thank you very much. I yield back.
I have a question that's kind of outside, I guess, the SBA's portfolio, but we're hearing from banks, from a lot of banks, that they're having a hard time lending to small businesses because of the scrutiny by the regulators when it comes to small business loans. And just out of curiosity, with your position on the cabinet, can you use that to, because we can't seem to have any influence whatsoever over the regulators, and they don't want to hear from us, and it doesn't make any difference anyway. I mean, advocating for small business, or at least advocating for, we got to use a little bit of common sense here, and that scrutiny is really having some issues out there. At least the banks are telling us that. So can you use that position to push the Fed along a little?
Thank you, Congressman Graves. We have seen exactly the same concern, and I have, in fact, had conversations with regulators on a consistent basis, because it's a real issue if the guidelines that are given out by the regulators are not interpreted in a clear and precise way all the way down into the regions. And that creates uncertainty at the banks as to how a loan would be classified, and that makes them not willing to make the loan. And this is a matter, as you describe, of constant concern, and I take it as part of my job to continually have this conversation with the regulators.
Well, that's good, because advocacy is, obviously is an important part. It is outside your portfolio, but it's obviously very important. Mr. Richmond?
Thank you, Mr. Chairman and Ranking Member, and thank you, Administrator Mills, for coming in. I guess I'll start sort of where the Chairman just left off, and just so happens I was visited by some of my constituents today who we normally don't view as small business owners, but I had a meeting with my home builders, and they were talking about the crunch that they have accessing capital in order to build homes. And one of the things they mentioned was that before the regulations and some other things, that if they had a signed purchase agreement from a person and the person was already pre-qualified for the mortgage, that they could take that and almost use that as security to get a loan. And they said in those instances they didn't have, to their knowledge in the room, and I guess it was about 15 to 20 home builders, that in their recollection they could only remember one or two that didn't go right. So I told them that I would pose that question to you. Is there something that the SBA can do specifically for home builders, or if there are any programs that you know of right now that they qualify for that they may not be paying attention to?
Well, my father-in-law was a home builder, and I know exactly the situation that you're describing. What we will do is come back to you with a specific thought and recommendation on which SBA loan program or activity or banking relationship might be the most appropriate to pursue.
And this question shifts away, but it goes back more to the new market tax credit program and our CDFIs, which in my opinion are working very well, especially in our inner cities and low-income communities. And I guess this question would be whether there's a way, of, if you have someone looking at ways to facilitate the 7A lending program with the CDFI program for low-income communities. That way they can benefit both from the tax credit and the 7A program.
Well, thank you, Congressman. As you know, over a year ago, we implemented a program called Community Advantage, which allows selected CDFIs, which have a good track record in managing loans, to have access to the 7A loan guarantees. And so that would be the primary vehicle that we use to engage CDFIs, which we think are really important new partners for us.
One of the ideas that came from someone in my district was that if you all contemplated allowing CDEs to participate in the Community Express loans, and that way the CDFIs would be able to attract more small businesses investing into the new market tax credit program.
We would. I'd be happy to get back to you on that.
Okay. And Administrator Mills, I don't have any specific additional questions for you. Do you have anything that I'll give you my last minute and a half if there's something that you just want to volunteer, something that came up that you want to address?
Thank you, Congressman.
With that, I'll yield back, Mr. Chairman. Thank you.
Mr. Cicilline?
Thank you, Mr. Chairman and Ranking Member, and welcome, Administrator Mills. It's good to have you back before the committee, and thank you for your visit to my home state. The small businesses in Rhode Island enjoyed having you there, and it was a great opportunity to talk about the work of the SBA, and thank you for doing that. What I want to just ask you about briefly is the SBIR program, which my state has had considerable success with. And in preparation for this hearing, I reached out to the individuals in my regional SBA office, as well as folks in the knowledge economy that's growing in Rhode Island and the research and development community. And what I heard from so many of them was that this program is successful, it's vital, it has led to a lot of innovative companies conducting business in our state, but that we just don't have enough participation. And one of the things that I proposed during our reauthorization was the FAST program, really, which I think was a successful way to do outreach to encourage participation in the SBIR program by providing grants to organizations that do that. And I know we didn't include it in the authorization, and I'm wondering sort of what strategies that you are developing to really broaden the reach of SBIR, which is such a good model and such a successful program. But while I'm very proud that we've had more than 290 awards and more than $100 million in grant funding in Rhode Island, which has been great under the SBIR and STTR, I think there are 39 states that are ahead of us. And so it seems to me that there's a lot of untapped opportunity. But without the FAST program, are there other ways that you're thinking about or that we can support broader outreach for this program?
Well, first of all, I want to thank this committee and Congress for the reauthorization of SBIR and STTR and for your commitment to it. We are working very hard on SBIR, and one of the things that I want to point out is that we've consolidated all SBIR solicitations, which used to be on 11 different agency websites, into one website, sbir.gov, and educating all of our various arms and counselors and partners to make sure that they mention and inform people about SBIR so that we have a broader network. With regard to FAST, my understanding is that although it was not extended in the reauthorization package, Congress could extend it through appropriations as they've done in past years.
And I take it you would recommend that we do that?
Well, as I said, it is the SBIR is a very important program. We are working very hard to make sure that in every aspect of small business development centers and our counselors, district offices, and advisors, that we incorporate knowledge about SBIR in our conversations with small businesses.
Thank you. And I just have one other area, and you said this in the beginning of your testimony. I arrived a little bit late, and I apologize, and I'm happy to get some information after the hearing. But would you just talk a little bit about the service-disabled veteran-owned small business program and the status of that? And this is an issue of considerable concern, I know, to many members of Congress in terms of ensuring that we're doing everything we can for service-disabled veterans, and this program obviously is designed specifically for that.
Yes, we have a number of programs for service-disabled veterans, including our contracting program, which you're referring to. But we also have some really extraordinary counseling, advice, and veterans entrepreneurship education programs, some of which are particular to service-disabled veterans. So those are critical as well, and we can make sure you have more information on those.
Great. I thank you, and I yield back, Mr. Chairman.
Thank you very much, Mr. Chairman. I thank you, Ranking Member, and I join my colleagues in welcoming Administrator Mills back to our committee. Administrator Mills, while I understand the concerns of my colleagues, I echo a lot of what has been said here today. I'd like to switch gears slightly. As we've discussed previously, MWBE small businesses face an uphill climb in the best of times. While our economy is still recovering, and we all understand that events outside of the United States' control, including the cooling of emerging economies, the Eurozone crisis, which are currently contributing factors, the most recent economic data is anything but encouraging. That being said, if we find ourselves in a situation where capital access finds itself even more constrained than it is currently, what is the SBA prepared to do with regards to perhaps a greater need amongst the small business community, and especially within the minority small business community?
Well, Congresswoman, we've had a lot of this conversation because you, like many members of this committee, have been concerned about this for some time. And as you know, we share this concern because although lending overall came back strong to the SBA, it did not come back strongly for small dollar loans in underserved communities. So 2 years ago now, we began a series of activities that, as I mentioned, we call More Doors, More Dollars, and they include the bringing in of CDFIs, the bringing in of faith-based institutions, and they include something else, which is an outreach program we did called the White House Urban Economic Forums. And my colleague and deputy, Marie Johns, and I have been, but she has been particularly active traveling the country and in many, many cities dealing with over 2,500 in-person participants, 800 mentoring relationships facilitated, 23,000 online viewers, directly trying to reach and access this women and minority-owned business community so that we can find a way to connect them to what they need, which can be contracts, it can be loans, it can be help and advice so that they can grow their businesses. We have an inclusive view of entrepreneurship, and we need to be working to make sure all our entrepreneurs have access and opportunity.
Well, let me ask a second question of you. We've discussed the fact that some SBA programs haven't lived up to their charter, and while I applaud the SBA's willingness to address the shortcomings of certain programs, what processes are is SBA putting in place to ensure that future newly configured programs are living up to their charters and don't require the overhaul that Community Express did, for instance?
Well, we are very actively monitoring and assessing and working on continuous improvement of all of our programs.
Well, I'd have no doubt that you'll keep your finger on the pulse of these new ventures. I want to also echo the sentiments of Congressman Schroeder about the hub zones and the usage of women and minority-owned businesses to get the contracts, and then the discarding of those companies when the contracts are awarded. That seems to be a very hard nut to crack on many levels. But I hope that vigilance is really is used to address this. And perhaps there needs to be some examples made of some of these companies that have been doing this so that, in the future, others won't see this as a means of accessing the contracting opportunities that are supposed to be, partnerships, quite frankly. And I think that this could be a gateway for more employment in communities that are having a hard time coming back, because now you're, opening up the landscape a little bit more for opportunities that didn't exist previously.
Well, let me repeat that on HubZone and really on all of our contracting and lending operation, we've intensified our supervisory and our enforcement activities, and we have a zero-tolerance policy for bad actors.
Ms. Velasquez.
I don't have further questions.
I want to, before we finish up, I want to echo Mr. Schrader's concerns with the rural loans, or the decrease in rural loans, and the outreach there, and would push for a little bit of outreach out there, because we want, they're just as important in the rural areas as anywhere. But I'd like to again thank you for coming in today and for being here to discuss, obviously, this very important issue and of capital access for small businesses. We know small businesses, we know on this committee that they're going to lead us out of the economic downturn and the economic recovery. And we want to continue, obviously, to be very vigilant in overseeing the programs that you administer. But with that, I'd ask unanimous consent. The members have 5 legislative days to submit statements and supporting materials for the record. Without objection, so ordered. And with that, the hearing is adjourned. Thanks again.
Thank you, Ms. Gowdy.